Welcome to the Tesla Daily News podcast for December 12th, 2025. I'm your host, and today we'll break down the top Tesla news that matters for investors and shareholders. Let's kick things off with Tesla's market action. Yesterday, Tesla closed at approximately $446.89, dropping about 1% from the previous day's close of roughly $451.45. The stock opened at $448.95, hit a high of $449.27, and a low of $440.33. We'll look at what drove that price move. Here's what's ahead in today's episode. We'll cover the surge in Tesla Model Y deliveries in Malaysia, explore BMW's integration with Tesla Superchargers, share global EV incentive trends, and what they mean for Tesla's demand. Discuss candid feedback from full self-driving users in Australia, and compare how Tesla stacks up as new robotaxi competitors emerge from traditional automakers like Mercedes. We'll also cover recent Tesla reliability headlines from German inspection agencies and what that means for customer perception. First up, Tesla's Model Y is leading Malaysia's booming EV market. Last month, Malaysia registered over 5,400 electric vehicles, a record, up 200% year-on-year. The Tesla Model Y took the number one spot, outpacing main rivals like BYD. This surge highlights Tesla's rapid international expansion and strong brand pull, especially as new right-hand drive markets open. It points to meaningful upside potential for Tesla's deliveries in Southeast Asia, which has historically lagged China and Europe. Analysts will be watching to see if this emerging market demand helps offset softening U.S. growth and how much it boosts quarterly delivery numbers, which are key for both revenue and market sentiment. Next, BMW joins the Tesla Supercharger network today in North America. Starting now, BMW electric vehicle owners in the U.S. have access to more than 25,000 Tesla Supercharger stations across the country. This marks a major step as more automakers adopt the North American charging standard, originally developed by Tesla. For Tesla investors, opening the network to competitors is a double-edged sword. It brings in new high-margin charging revenue, but also means more crowded chargers and increased maintenance costs. Still, industry analysts suggest the move cements Tesla as the dominant charging infrastructure provider in North America, which could factor into future stock valuation. Turning to customer experience, Australian Tesla owners are speaking out after nearly 2 months with full self-driving beta. Many drivers describe feeling like the captain of the car rather than a passenger, highlighting the need for constant supervision and readiness to intervene. While the system handles highways well, users report inconsistent performance on city streets and say they're not quite ready to trust FSD in all conditions. For investors, this underscores the technical hurdles ahead for reaching true Level 4 autonomy and, by extension, realizing higher software margins and licensing opportunities. Tesla's pace to reach full driverless capability remains a critical watchpoint for its long-term stock upside. On the competitive front, Mercedes has announced that its new S-Class will soon operate as a robotaxi featuring Level 4 self-driving technology. Though the initial rollout targets the Middle East rather than Germany or the US, Mercedes is partnering with Chinese tech firms Momenta and Lumo to deploy these vehicles. The move ups the stakes in the premium robotaxi race, indicating that legacy manufacturers are accelerating autonomous efforts. For Tesla, it raises the bar, but also validates the huge potential market for driverless ride-hailing, an area that Tesla bulls cite as a primary future revenue stream. Watch for how quickly Mercedes scales and whether regulators approve wider deployment. Let's talk regulatory perception. In the latest TV inspection reports from Germany, Tesla finds itself at the bottom tier in several categories for reliability among vehicles aged 2 to 7 years. While owners love Tesla's technology and acceleration, recurring issues with suspension, steering, and headlights have drawn scrutiny in European inspection statistics. This could impact resale value and erode customer confidence in some markets, potentially driving up warranty costs. For investors, reliability data might feed into analyst downgrades or increased competition from brands with higher long-term dependability ratings. Industry-wide, new data shows that EV incentives climbed in November as average electric vehicle prices softened. Despite manufacturer incentives and price cuts, including 0% financing deals on some Model Y variants, US EV sales slowed. Tesla faces a balancing act, sustaining demand through pricing and promotions without eroding margins significantly. As more manufacturers chase market share with discounts, investors should watch Tesla's margin commentary in upcoming earnings and consider how further price competition might affect long-term profitability. And finally, Tesla's FSD strategy contrasts sharply with Mercedes and Waymo's push for driverless robotaxis. While Mercedes targets select geofenced markets for initial autonomy and Waymo scales in U.S. cities, Tesla's approach has been wide release with human oversight. Regulatory acceptance and technical achievement will decide which model wins. Whichever company achieves reliable, scalable autonomy first could see meaningful first-mover advantage reflected in its stock. In summary, today's big Tesla themes are global growth in new markets like Malaysia, the strategic evolution of charging infrastructure partnerships, autonomous driving's difficult path and rising competition, as well as cost pressures and reliability perceptions in the maturing EV sector. Investors should closely watch delivery numbers, margin updates, and autonomy milestones over the coming weeks. That's it for today's Tesla Daily News podcast. Be sure to subscribe and check back tomorrow as we track the latest delivery volumes and any updates on upcoming product events and earnings guidance. For more data-driven Tesla news, visit our website and follow us for your daily investor briefing.